There are days in the market when everything feels ordinary, and then there are days that change everything. Days where volatility becomes a storm, where uncertainty becomes a test, where your emotions become louder than your logic. Days like CPI, FOMC, and jobs data, when the market stops behaving like a chart and starts behaving like a mirror. Because on event days, you're not just facing price action. You're facing yourself, your fear, your impulses, your need to be right, your craving to catch the big move, your hidden weaknesses you thought no one could see. Event days reveal the parts of you that you've been avoiding in silence. This video is not about predicting news. It's not about calling the right direction. It's not about chasing volatility. This video is about something far more important: protecting your psychology, the only edge that truly matters. If you can master your mind on the most chaotic days, you can master it on every. Welcome to Mind Over Markets, where we don't just study charts, we study ourselves. Let's begin. There are days in the market that look normal on the surface, and then there are days that test everything you think you know about yourself. CPI, FOMC, jobs data, event days. Most traders fear the volatility, but what they should really fear is their own mind. Because on days like these, the market doesn't destroy your account. Your psychology does. This is the truth. No one wants to admit your biggest losses didn't come from bad analysis, bad entries, or bad indicators. They came from emotions you didn't know how to control, from impulses you thought you buried, from habits you didn't realize were running your trading for you. Event days expose the version of yourself you try to hide, and that's why they are so dangerous. Today, I want to take you deep into the mental battlefield that every trader walks into during CPI, FOMC jobs, and every high-impact news release. Not the strategy, not the technical levels, but the psychological minefield that decides whether you survive or start the slow process of blowing up your account. Because if you can control your mind on an event day, you can control it on any day. And that's where real mastery begins. Let's start with a truth that most traders never want to say out loud. You don't trade the news. You trade your beliefs about the news. You trade your hopes, your fears, your need to be right, your desperation to catch a big move, your fear of missing out on what could have been the trade of the month. Event days don't amplify the market. They amplify you. The volatility is just the mirror. On most days, your emotions whisper. On event days, they scream. And if you don't have a plan, if you don't have structure, if you don't have a clear boundary between you and your impulses, the market will drag you into chaos faster than you can blink. Think back to your worst losses. Not the ones that hurt financially, the ones that hurt psychologically, the ones that left you staring at your screen, wondering what just happened. If you look closely, you'll notice something. Almost all of them happened on days you weren't mentally prepared for. You weren't ready for the speed. You weren't ready for the uncertainty. You weren't ready for the emotional punch that comes from watching price explode in one direction, then instantly reverse. You weren't ready for the part of you that wants to gamble. And that's the part the market loves to expose. Event days carry a silent promise, a promise your brain interprets as opportunity. But what your brain sees as opportunity, your account often experiences as trauma. Let's talk about the first psychological trap, the illusion of quick wealth. On event days, the candles are bigger, the volatility is wilder, the moves look cleaner, and deep inside something wakes up. A voice that says, this is your chance. This is the moment. If you get it right, you can make in 1 hour what normally takes you a week. But this voice isn't coming from discipline. It isn't coming from logic. It's coming from greed wearing a mask of confidence. Greed pretending to be ambition. Greed pretending to be intuition. Greed, pretending to be skill. And the market knows exactly how to use it against you. Your brain is wired for reward. On event days, that reward feels bigger, faster, more certain. Even though you know the risk is higher, your emotions lie to you. They tell you that if you don't take the trade, you're missing out on something huge. So you start trading bigger than usual. You take setups that aren't truly setups. You convince yourself that volatility equals opportunity. You enter early. You enter without confirmation. You enter because your psychology is no longer in the passenger seat. It's driving. But here's the truth. Volatility doesn't create opportunity. It only magnifies your weaknesses. If you're undisciplined, it magnifies recklessness. If you're fearful, it magnifies hesitation. If you're impulsive, it magnifies gambling. If you're overconfident, it magnifies destruction. Volatility is a magnifying glass, and you are the subject under it. Now let's talk about the second trap, the need to predict. On event days, traders feel an urge to know, to anticipate, to guess the direction, even though they know better. There's something intoxicating about the idea of calling the move correctly before it happens. It feeds the ego. It creates a story you want to live inside. It makes you feel superior. Even before you click a button, you start looking for clues, for patterns, for anything that gives you the illusion of certainty. But the key word is illusion, because the truth is you're not looking for confirmation from the market. You're looking for confirmation of the prediction you already made in your mind. And once you create a prediction, something dangerous happens. You become emotionally attached to it. Your brain forms a bias. You begin filtering out any information that contradicts the story you want to be true. And the moment the market starts to move, you don't react objectively. You react emotionally. If it moves your way, you get euphoric. If it moves against you, you get stubborn. You forget the plan. You forget risk. You forget structure. All because your brain would rather be right than be profitable. Event days are psychological traps because they activate the part of your mind that is addicted to certainty in a market designed to destroy it. The next trap is the most powerful one, the fear of missing out. Nothing triggers FOMO like CPI or FOMC. When you see explosive movements, massive candles, sharp reversals, your brain goes into overdrive. You start thinking about the money you could have made, the trades you should have taken, the opportunity slipping away. Your nervous system doesn't understand financial markets. It only understands one thing: gain or loss. So when the market moves without you, your brain interprets it as a loss. Even though you didn't lose anything, it feels like you did. This emotional illusion makes you chase. It makes you jump in late. It makes you overtrade. It makes you take setups you would never touch on a normal day. And once you enter a bad trade out of FOMO, something even worse happens. Your psychology collapses into fight or flight mode. Instead of managing risk, you start managing anxiety. Instead of following structure, you start following impulse. Instead of waiting for confirmation, you start trying to catch every move. And every decision becomes worse than the one before. Finally, there's the fourth psychological trap, the survival response. Most traders don't realize this, but event day volatility actually activates a primitive instinct in your brain. When the market moves violently, unpredictably, and faster than your mind can process, your nervous system interprets it as danger. Your breathing changes. Your heart rate increases. Your muscles tense. Your focus narrows. You stop analyzing. You stop thinking. Your brain switches to impulse mode. Every candle feels personal. Every wick feels like a threat. Every spike feels like a chance you're about to miss. And in this state, you are no longer trading the market. You are trading your biological fear response. You are trading like an animal trying to survive, not a professional, trying to execute. This is why traders blow accounts on event days, not because the market is dangerous, but because their psychology is unprepared. You're not just fighting the chart. You're fighting millions of years of evolutionary wiring that was never designed for financial markets. Now that we've uncovered the psychological traps, we can begin constructing the plan that protects you from them. A plan that turns chaos into clarity. A plan that turns uncertainty into structure. A plan that transforms event days from something you fear into something you understand. But before we build the plan, you need to understand one core truth. On event days, your goal is not to make money. Your goal is to protect your psychology. Because if you lose your psychology, you lose everything. And that is where we continue in part 2. On event days, your goal is not to make money. Your goal is to protect your psychology. Because when your psychology is damaged, every part of your trading follows it downward. You begin hesitating on good setups. You begin forcing trades to make up for bad ones. You begin doubting your system, doubting your edge, doubting yourself. You begin seeing the market not as a place of opportunity, but as a threat. And once you enter that mental state, it becomes almost impossible to climb out. This is why the greatest traders aren't defined by how much they make. They're defined by how well they protect themselves. They know that longevity matters more than excitement. Consistency matters more than adrenaline. Clarity matters more than volatility. This is the mindset you must bring into every major economic event. But mindset alone is not enough. You need a plan. What is an event day risk plan? It's not a strategy. It's not a template. It's not a rule book full of complicated conditions. It is a psychological shield, a set of principles that prevent your emotions from dragging you into trades you should never take. A structure that protects you from the parts of your mind that come alive on days like CPI, FOMC, and jobs. And like every powerful shield, it starts with redefining your objective. This is where most traders fail. They walk into event days with the goal of winning big. They treat these days like a lottery ticket. They tell themselves that volatility equals opportunity, that today is the day their account will explode in the right direction. But that thinking is exactly what leads them to blowing up. So your first rule is simple but transformative. On event days, your goal is not to profit. Your goal is to avoid unnecessary damage. When you embrace this, something changes inside you. You stop chasing. You stop rushing. You stop reacting emotionally to every spike and every wick. You become patient. You become a spectator first and a participant only when the conditions are truly clear. This is the beginning of psychological mastery. Now let's move deeper into the first pillar of your event day risk plan. It begins with a rule that sounds simple, yet very few traders follow. Do not trade before the news. This rule is not about being cautious. It's about being rational. Before major data releases, the market behaves like a storm about to break. The air feels tight. The movements become deceptive. Liquidity vanishes when you need it most. Price begins to form structures that are nothing but illusions, traps designed to lure you in. You think you're catching a breakout, but the breakout is engineered. You think you're catching a trend, but the trend is fabricated. You think you're spotting momentum, but the momentum is hollow. And the moment the news hits, all of it disappears. Your stop is hit. Your bias collapses. Your composure is gone. You're left confused, frustrated, and emotionally unstable before the real move even begins. Trading before the news is not trading. It is gambling with a timer. Your unconscious mind knows this, but greed convinces you otherwise. You tell yourself if it breaks this level now, it'll explode after the news. If I enter early, I'll get a perfect position. If I time it right, I'll be ahead of everyone else. But this thinking is a psychological illusion. It distorts your perception of risk. It makes you forget the most important truth of event days. You don't know what will happen. No one does. Not the analysts, not the economists, not the banks, not the influencers, not the algorithmic models. The market is bigger than all predictions. When you enter before the news, you are trying to outsmart something that cannot be outsmarted. And that arrogance costs traders more than any technical mistake ever will. So your plan begins with a commitment, no entries before the release. Because discipline is not about avoiding trades, it's about avoiding danger. And there is no greater danger than thinking you can predict chaos. Now let's move to the second pillar of your plan. Do not trade at the moment the news releases. This is where many traders feel the strongest temptation. Their heart rate increases, their eyes widen. Their mind says, if I catch this right now, I can make more in 30 seconds than I usually make all week. But the market doesn't reward bravery. It punishes impulsiveness. Right at the release, spreads widen. Slippage destroys your entries. Liquidity disappears for retail traders. The chart moves too fast for rational decision-making. You're not trading structure. You're trading chaos. Every candle is a trap. Every spike is a test. Every sudden move is a psychological trigger designed to pull you in. This is where most traders lose control. They forget risk. They forget their rules. They forget everything except the possibility of an instant profit. But the market doesn't care about your hope. It reacts violently and unpredictably. And if you expose yourself in those first few seconds or minutes, you are gambling, not trading. Professionals know this. That's why they wait. They don't rush. They don't force. They allow the initial explosion to settle. They let the impulses fade. They wait for the market to show its hand. And then when clarity returns, they execute. This brings us to the third pillar of your plan, one of the most powerful psychological tools a trader can use, the 30-minute rule. If you want to protect your mind, and if you want to trade with clarity instead of emotion, you must learn to wait. Not for 2 minutes, not for 5 minutes, but for long enough that the chaos passes. The first 30 minutes after a major news event are where accounts die. This is where the inexperienced get slaughtered. This is where the emotional get manipulated. This is where the impulsive get punished. The candles are fast. The spreads are wide. The movements are violent. The direction is unclear. And your mind is in the wrong state to handle it. You're still excited. You're still anxious. You're still imagining what could happen. You're still trying to predict the next move. This is the mental state where greed and fear both have complete control. So your rule is simple. For the first 30 minutes, you do nothing. You observe. You breathe. You let the market reveal its structure. You allow volatility to normalize. You let your emotions settle. Because clarity doesn't come from reacting. It comes from watching. In those 30 minutes, you're not waiting for a setup. You're waiting for your psychology to stabilize. You're waiting for your mind to return to neutral, the only state where good trading can happen. The fourth pillar of your event day risk plan is about risk itself. On event days, risk must be lower than usual, not because the market is inherently dangerous, but because you are. Event days tap into your deepest emotional patterns. They amplify excitement. They inflate confidence. They increase fear. They distort judgment. This is why great traders reduce size during high-impact events. They know they can still take trades, but they choose to expose less of their account because they understand that even with a clear mind, event days introduce unpredictable factors. Lowering your size is not a sign of weakness. It is a sign of mastery. It tells your brain, I am in control. I am not here to gamble. I am here to survive. When your risk is smaller, your emotions are calmer. When your emotions are calmer, your decisions are cleaner. When your decisions are cleaner, your results are better. The market becomes less threatening. The volatility becomes less personal. You are no longer fighting your instinct to protect yourself. You are simply trading. This is how professionals approach event days, not with aggression, but with humility. Finally, we arrive at the fifth pillar: no trade without a predefined plan. On event days, randomness is the enemy. Uncertainty is the enemy. Impulsiveness is the enemy. You cannot afford to improvise. You cannot afford to chase. You cannot afford to jump in because you feel something. Every scenario must be defined before the news hits. If price breaks upwards, what will you do? If price collapses, what will you do? If price becomes chaotic, what will you do? If you cannot answer these questions before the event, you will not answer them rationally during the event. Your brain cannot think clearly in a high adrenaline state, but it can execute a plan you created when you were calm. The plan is your anchor. It prevents emotional drifting. It keeps you grounded when everything around you feels unstable. It keeps you rational when your impulses try to take over. And most importantly, it protects your psychology, because every mistake you avoid today strengthens the trader you become tomorrow. Your event day risk plan is not just about rules. It's about constructing a mental environment where discipline can survive pressure, where clarity can survive chaos, where objectivity can survive emotion. And that brings us to one of the most powerful psychological concepts in trading: the separation between you and your impulses. If you want to master event days, you must learn to observe your emotions without obeying them. Every trader has two versions inside them: the calm, rational version and the emotional version trying to break free. On normal days, you might keep the emotional version under control, but on event days, the pressure intensifies. The market becomes louder, the candles become bigger. Your thoughts become faster, and suddenly, that emotional version inside you wakes up. It says you're missing out. You're wasting time. You should be in this trade. You can catch that move. You need to make money today. That voice grows stronger with every candle that moves without you. If you don't create distance from that voice, it will take over your trading. This is why event days are not won on the chart. They are won in your mind. The sixth pillar of your risk plan is designed to help you win this internal battle. Ask yourself 3 psychological questions before you enter any trade. These questions act like a filter, a checkpoint that stops your emotions from slipping through the cracks, a way to separate impulsive action from intentional action. The first question is this: am I calm, or am I trying to make something happen? If you are calm, your thinking is clear, your perception is accurate, your judgment is stable. But if you are trying to make something happen, you are no longer trading the market. You are trading your expectations. You are pushing, forcing, trying to bend the market to your will, and the market does not bend. The second question: if this trade loses, will I still be emotionally stable afterward? If the answer is no, then you are risking too much, or you are operating from fear, or you are trying to recover something you lost earlier, or you are entering with the wrong mindset. A healthy trade is one that you can lose without damaging your psychology. If a single loss has the power to break your emotional structure, you should not take the trade. And the third question Is this trade part of my plan, or is it part of my impulses? This is the question that most traders refuse to ask, because deep down they already know the answer. If the trade is part of your plan, it came from clarity, from structure, from discipline, from patience. If the trade is part of your impulses, it came from emotion, from fear, from excitement, from the pressure of the moment. Every time you choose a plan over an impulse, you grow as a trader. Every time you choose discipline over excitement, you strengthen your future self. Every time you choose clarity over chaos, you protect your psychology. These three questions may seem simple, but they have the power to save your account. And more importantly, they have the power to save you from yourself. Now let's move to the seventh pillar of your plan, the understanding that no trade is a legitimate position. This is where many traders struggle, because they equate activity with progress. They believe that if they are not in a trade, they are not doing anything. They feel guilty for waiting. They feel restless. They feel behind. But silence is not inactivity. Patience is not weakness. Observation is not wasting time. No trade is a decision, a strategic one, a disciplined one, a powerful one. On event days, the highest level traders often sit out entirely, not because they're scared, but because they understand that the best edge is the one that protects your emotional stability. You don't grow by forcing trades. You grow by making the choices that strengthen your psychology. You grow by saying, today is not my day. I don't need to be in this move. I don't need to chase anything. I would rather protect my mind than risk losing it. Every time you choose not to trade, when the conditions aren't right, you invest in your discipline. You sharpen your edge. You strengthen your identity as a trader. Because trading is not just about making money. It is about becoming someone who can survive long enough to make money consistently. This leads us to the eighth pillar of your plan. Accept that you cannot catch everything, and you shouldn't. On event days, the market moves violently. It creates massive opportunities and massive traps. Your job is not to catch every move. Your job is to catch the right move. The move that aligns with your plan, the move that respects your rules, the move that forms clearly, the move that doesn't require gambling. The market doesn't reward traders who try to catch everything. It rewards traders who wait for the moments that fit their system. But there is something deeper here, something psychological. When you let go of the need to catch everything, you also let go of the fear of missing out. You stop feeling like you need to chase. You stop feeling pressured by volatility. You stop fantasizing about the profit you could have made. You return to neutrality. You trade from calmness, not chaos, from confidence, not fear, from discipline, not desperation. This is the mindset that keeps your account safe and keeps your mind healthy. The ninth pillar of your plan is the emotional reality that many traders refuse to face. The market does not owe you anything. It doesn't owe you profit because you waited. It doesn't owe you a win because you lost yesterday. It doesn't owe you a big move because you've been disciplined. It doesn't owe you clarity. It doesn't owe you perfect conditions. It doesn't owe you anything at all. The moment you expect the market to reward you is the moment your psychology becomes vulnerable. Expectation leads to entitlement. Entitlement leads to frustration. Frustration leads to emotional trades. Emotional trades lead to losses. And losses, when paired with entitlement, lead to self-destruction. On event days, this psychological trap becomes even stronger. You see volatility, you see movement, you feel excitement, you feel urgency, and without realizing it, you start thinking that the market should give you something, but the market does not respond to your desires. It responds to liquidity, to order flow, to participation, to reality. The only thing you control is your mind, your risk, your behavior, your choices. When you release the expectation that the market owes you something, you trade with freedom. You trade with clarity. You trade with calmness. You stop forcing. You stop chasing. You stop gambling. This psychological shift is one of the most powerful in all of trading. It transforms how you see the market. It transforms how you see yourself. And that brings us to the 10th and final pillar of your event day risk plan. Understand that your greatest opponent is not the market. It is your lack of preparation. Most traders don't blow accounts because they misread the chart. They blow accounts because they misread themselves. They didn't study their emotional patterns. They didn't examine their impulses. They didn't confront their weaknesses. They didn't build a plan that protects them from their own psychology. On event days, the market tests your preparation. If you have none, you fail. If you have some, you survive. If you have mastery, you thrive. Preparation is not about predicting the move. It's about preparing your mind for uncertainty, preparing your emotions for volatility, preparing your discipline for pressure. When you are prepared, you become resilient. When you are resilient, you become calm. When you are calm, you become effective. And when you are effective, you do not fear event days. You respect them. You navigate them. You use them to strengthen yourself because every event day is a mirror. It shows you who you really are as a trader, not the trader you pretend to be, not the trader you wish you were, but the trader you are beneath the surface. And when you face that truth, you begin to grow. We've talked about the plan. We've talked about the rules. We've talked about the psychological traps that pull traders into chaos during CPI, FOMC, and jobs reports. But a plan is only as strong as the person following it. And this is where the deeper work begins. Because trading isn't just a skill, it's an identity. It's a way of thinking, a way of reacting, a way of interpreting the world around you. Event days don't simply test your strategy. They test your emotional maturity, your patience, your discipline, your honesty with yourself. To survive in the long run, you have to become the kind of person who can follow a plan, even when every part of you wants to break it. So let's talk about the psychological transformation required to become that person. It begins with one essential truth. You do not rise to the level of your goals. You fall to the level of your discipline. Every trader wants success. Every trader wants consistency. Every trader wants profitability. But wanting doesn't change anything. The market doesn't reward wanting. It rewards preparation. It rewards patience. It rewards emotional control. It rewards the trader who can sit through discomfort without losing themselves inside it. This is where your growth begins, by understanding that discipline is not something you apply occasionally. It is something you become. And to become disciplined, you must first understand what destroys discipline in the first place. Most traders think their problem is strategy, or timing, or indicators, or entries, or exits. But the real enemy is emotional discomfort. When you feel discomfort, your mind looks for relief. And impulse trading offers quick relief, just one click, just one entry, just one attempt to chase the move, just one opportunity to ease the tension inside your chest. In that moment, you aren't thinking about risk. You aren't thinking about your plan. You aren't thinking about long-term consistency. You're thinking about relief, about making the discomfort stop. This is why traders overtrade. This is why they revenge trade. This is why they chase moves that were never meant for them. They aren't trying to trade well. They're trying to escape the feeling of being uncomfortable. So the real question becomes, can you sit with discomfort without acting on it? Can you watch the market move without you and still remain calm? Can you witness volatility and not feel pulled into its gravity? Can you let opportunity go without feeling the need to chase it? This is emotional mastery, and it is the foundation of every successful trader. It begins with awareness. You must learn to notice the emotional urges inside you without obeying them. When you feel FOMO, acknowledge it. When you feel greed, acknowledge it. When you feel fear, acknowledge it. When you feel impatience, acknowledge it. When you feel the urge to click the button, acknowledge it. Because emotions lose their power the moment you shine awareness on them. Most traders try to suppress their emotions. They try to act like they're not scared, not greedy, not impulsive. But suppression doesn't work. Suppression builds pressure. Suppression is what makes emotions explode at the worst possible moment. Awareness is the antidote. When you observe your emotions without judgment, you create space. You create distance. You create separation between you and your impulses. In that space, you become free to choose discipline, free to choose patience, free to choose clarity. This is where psychological strength comes from. And this leads us to the next transformation. You must stop identifying with your emotional reactions. You are not your fear. You are not your greed. You are not your impulses. You are not your mistakes. These are temporary states. They are not who you are. But when you merge your identity with your emotions, you feel controlled by them. You feel like trading is a battle inside your own head. You feel like success is constantly slipping through your fingers. You say things like, I am an emotional trader. I am undisciplined. I always break my rules. I can't control myself. But these are not truths. These are stories your mind tells you because it hasn't learned how to separate identity from impulse. Your job is not to eliminate emotions. Your job is to stop letting them define you. The moment you say, I feel the urge to trade out of FOMO instead of I am a FOMO trader, you reclaim power. The moment you say, I feel impatience right now, instead of I am an impatient person, you reclaim power. The moment you say, I feel the desire to gamble instead of I am a gambling trader, you reclaim power. Identity is everything. Because you will always act in alignment with who you believe you are. When you see yourself as undisciplined, you act undisciplined. When you see yourself as emotional, you act emotionally. When you see yourself as impulsive, you act impulsively. But when you see yourself as a disciplined trader, your choices begin matching that identity. You wait, you observe, you execute with clarity, you protect your psychology. You respect your plan. Discipline becomes your default. This transformation doesn't happen overnight. It happens through repetition, through consistency, through daily decisions that reinforce who you want to become. This brings us to the next phase of your evolution. You must learn to detach from outcomes. On event days, this is especially important because outcomes become unpredictable. Volatility becomes extreme. Whipsaws become normal. If you attach your emotions to the outcome of every trade, the market will control you. But if you attach your emotions to the quality of your decisions, you will control yourself. A good trade can lose money. A bad trade can win money. This is why outcome-based emotions are dangerous. Your brain gets confused. It rewards the wrong behavior. It punishes the right behavior. It creates emotional wiring that destroys your long-term consistency. On event days, when outcomes are even more unstable, attachment becomes a psychological trap. So you must shift your focus. Stop asking, did I make money? Start asking, did I follow my plan? Did I manage risk correctly? Did I stay disciplined? Did I act from clarity and not emotion? Did I protect my psychology? These are the real metrics of success. Mastery is not measured by the result of one trade. It is measured by the consistency of thousands of decisions made over time. Detach from the outcome. Attach to the process. This is where consistency is born. Now let's go deeper into the emotional framework that separates professional traders from everyone else. They trade from neutrality, not excitement, not fear, not desperation, not hope, not frustration, neutrality. Neutrality is the state where you can see the market clearly, where your mind isn't being pulled by emotion, where your judgment isn't clouded by expectation, where you make decisions based on structure, not impulse. Neutrality is your mental home. It is the state you must return to before every trade. But neutrality can only be accessed when you release attachment, when you stop trying to control the market, when you stop trying to force outcomes, when you stop imposing your hopes onto price. Neutrality requires surrender, not surrendering to the market, but surrendering your ego. Because ego is the true enemy of trading. Ego makes you want to predict. Ego makes you want to be right. Ego makes you hold losing trades longer than you should. Ego makes you refuse to accept when conditions aren't right. Ego makes you enter trades that your plan would never approve of. On event days, ego becomes dangerous. Volatility fuels it. Excitement inflates it. The possibility of quick profit awakens it. But a trader with ego cannot survive long in this environment. You must learn the art of psychological surrender. Surrender the need to be right. Surrender the need to catch every move. Surrender the need to force success. Surrender the need for excitement. Surrender the need for validation. When you surrender ego, you become free to trade objectively, free to wait, free to follow your plan, free to stay in control of yourself. This is where your power comes from, not from predicting the market rip, but from mastering your internal world. And now we arrive at the final, most important part of this transformation. You must build an identity that does not collapse under pressure, because event days are pressure. They are anxiety. They are temptation. They are emotional chaos wrapped in financial opportunity. To survive them and to thrive beyond them, you must become the version of yourself that stays grounded no matter what happens on the chart. The version of yourself that does not panic, does not chase, does not overtrade, does not gamble, does not react emotionally, does not lose control. This version of you exists, but you must build it piece by piece, choice by choice, trade by trade. Consistency isn't something you achieve, it's something you become. Everything we've explored so far, the traps, the discipline, the identity, the emotional mastery, leads us to one final truth. Event days aren't just moments in the market. They are portals. They reveal who you've been and who you are becoming. Most traders don't realize this. They think CPI, FOMC, and jobs reports are just data releases, just numbers, just volatility, just charts. But if you look closer, you'll notice something deeper. Event days show you the version of yourself that you haven't yet mastered. They show you the parts of your psychology that collapse under pressure. They show you the emotions you still haven't learned to control. They show you your impulses, your fears, your cravings for excitement. They show you the gap between your intentions and your discipline. And that gap is where your growth lives. It's never been about the market. It's always been about you. A trader becomes successful not because the market becomes easy, but because their internal world becomes stable. Event days accelerate this realization. They make the psychological battle visible. They force you to see your weaknesses clearly. They challenge you to confront the truth you've been avoiding. But the truth is a gift, because once you see it, you can change. So let's bring everything together into one final unified understanding. Your event day risk plan is not about avoiding volatility. It's about avoiding self-destruction. It's about replacing impulsiveness with intention, replacing chaos with clarity, replacing adrenaline with awareness, replacing ego with discipline. It's about giving yourself the structure required to stay in control of your mind. Because if you lose control of your mind, it doesn't matter how much skill you have. It doesn't matter how good your strategy is. It doesn't matter how accurate your analysis might be. You will sabotage your own success. But if you protect your psychology, you protect your future. This is where mastery begins. And mastery comes from commitment not just for one day, but every day. A commitment to follow your plan. A commitment to protect your emotional capital. A commitment to wait for clarity. A commitment to reduce size when volatility spikes. A commitment to avoid trading before or at the moment of the news. A commitment to respect the 30-minute rule. A commitment to filter trades through the 3 psychological questions. A commitment to let go of the need to catch every move. A commitment to embrace no trade as a powerful decision. A commitment to detach from outcomes. A commitment to become the disciplined version of yourself, not occasionally, but consistently. This commitment becomes your foundation. Because the truth is simple, if you cannot control your mind, you cannot control your trading. When the market becomes wild and unpredictable, you will not rise to the level of your ambitions. You will fall to the level of your discipline. And discipline is not something you practice only when it's convenient. Discipline is something you practice especially when it's uncomfortable, when volatility is high, when opportunity feels irresistible, when your emotions are louder than your logic, when you feel like you must act, must catch the move, must take the trade. That's when discipline matters most, because that's when everything is on the line. Your identity, your consistency, your account, your future. Event days are where traders are separated, not by intelligence, not by strategy, not by analysis, but by psychology. The undisciplined get exposed, the impulsive get punished, the impatient get trapped, the overconfident get humbled, the emotional get overwhelmed, but the prepared, the grounded, the calm, the disciplined, they survive, they wait, they watch, they execute from clarity, they trade from neutrality, they protect their psychology with every decision, and over time they become the traders others admire, not because of how much they make, but because of how unshakable they become. Your goal is not to be fearless. Your goal is to be stable. Your goal is not to be perfect. Your goal is to be consistent. Your goal is not to control the market. Your goal is to control your responses. When you master these things, the market becomes less threatening. Your emotions become less chaotic. Your decisions become more precise. Your identity becomes stronger. You become the kind of trader who doesn't crumble under pressure, the kind who doesn't chase, the kind who doesn't overtrade, the kind who doesn't gamble, the kind who doesn't break at the slightest sign of volatility. You become the trader who remains calm in chaos, grounded in uncertainty, disciplined in temptation, neutral in emotion. This is the trader who survives. This is the trader who grows. This is the trader who lasts. And eventually, this is the trader who wins. So if there's one message I want you to take away from this entire journey, it's this: master the mind and you master the market. Every time you choose patience over impulse, you take a step forward. Every time you choose clarity over chaos, you take a step forward. Every time you choose discipline over excitement, you take a step forward. Every time you choose neutrality over emotion, you take a step forward. Trading is not about speed. It's about direction. And every decision either moves you toward mastery or away from it. Event days are opportunities not to make money, but to strengthen your identity, to practice discipline under pressure, to test your mental stability, to observe your emotional patterns, to see where you still need growth, to become the trader you know you can be. And one day, when the market explodes in volatility again, when CPI hits, when FOMC speaks, when jobs data shocks the market, you will sit there calmly, breathing evenly, watching, observing, waiting. Not because you're scared, but because you're grounded, because you are in control, because your identity is built on discipline, not impulse. You won't feel pressured to act. You'll act only when the conditions are right, only when your plan aligns, only when your mind is clear. And when you take the trade, you will know it's not from fear, not from excitement, not from greed, not from FOMO. It will be from mastery. This is who you are becoming, a trader with discipline stronger than volatility, a trader with clarity sharper than chaos, a trader with emotional neutrality that nothing can shake, a trader who can walk through the fire of event days and remain unburned, a trader who no longer fears the market because they have learned to master themselves. This is the beginning of your evolution. Mind over markets, always. If you've made it this far, it means something powerful. It means you are not just another trader chasing excitement. You are someone who wants mastery, someone who wants longevity, someone who understands that the real battle has always been internal. Event days will come and go. Volatility will rise and fall. The market will change its shape 1,000 times. But your psychology, your discipline, your identity, these are the things that determine your future. Every moment of patience strengthens you. Every moment of clarity sharpens you. Every disciplined choice becomes part of who you are. You do not need to control the market. You only need to control yourself. Because when your mind is steady, your trading becomes steady. When your emotions are quiet, your decisions become precise. When your identity is grounded, no amount of volatility can shake you. This is the path you are walking now, the path of the calm, the prepared, the disciplined trader. Event days no longer have to be something you fear. They can become the moments that reveal your strength. Thank you for being here. Thank you for choosing to grow. And remember, in trading and in life, it is always mind over markets. Until next time.